Hi guys, how you going? You've got Riz Khan here from RionCapital.com. In this particular video, I'm going to go over when to invest into real estate and when not to invest into real estate. So I'm going to go over a quote from Warren Buffett, who tells us when to invest and when not to invest. I'm then going to show some indicators, some market indicators for when you should be buying and when you should be selling. I'm then going to talk about the purpose of these indicators, right? What their actually purpose is, and what they actually try to predict and how they help you for knowing when to buy and when to sell. I'm then going to let you in on a little secret on how you can always have the indicators in your favor, on how you can always buy them cheap regardless of what the indicators are saying. And then as always, I'm going to give you next steps, right? So if you do like what you see here, you know exactly what to do next to take advantage of this information. So let's get started. With Warren Buffett, what he basically says is that you should invest when fear and uncertainty grip the mind of the crowd. What's he saying there? So when people are fearful, right? When people are scared and they're uncertain about the future, they don't know what the future is going to hold and they're scared about the future, that is when it's the best time to get in and invest. And you should sell when wild hopes and speculative fever burn away reason. So what he's saying there is that, prices, they have a reason for being at that particular price, right? For example, when the cost of building a house is so much, when the wild hopes, when everybody's speculating and buying houses so much higher than what it actually costs to rebuild those houses and what the fair market value of those houses is, that's when you know that wild hopes and speculative fever are burning away any reason for why they are doing that, and they're basically just pushing up the price, and that is when it's time to sell. So that's what Warren Buffett says. Let's now take a look at some indicators that will tell us when to buy and when to sell. Whoops, let me just close that up. So when to invest and when to actually sell. Okay, so let's open this one up first, when to buy. Okay, just going to bring this over this way so we can actually read it. So the best time to buy is when capital is coming into the USA real estate market. At the moment, what we're seeing is that Canada, UK, the Netherlands, Asia and Middle East, they're all looking to currently invest into USA real estate. So that's currently happening right now. Another time when it's a good time to buy is when construction is decreasing, because what happens is that there's too much supply. There's too much supply of these new constructions. And then what happens is they need to start sort of competing with existing houses. So although the existing houses, they may not be that much older than the new houses, these new houses that are currently getting built and that are similar to the existing houses that may not be so much older, these new houses started then competing for prices to compete with those existing houses, and that is also a good time to buy. Another thing to look at is interest rates. When interest rates are low, of course the affordability is therefore high and people can get loans, and the mortgage rates are a bit lower, so they can afford to pay off more, and therefore lots of people go out and start to buy houses, and that's a good time to get in. Another good time to get in is when inflation is about to rise. So for example, when the government is performing some type of quantitative easing, because as you know, real estate rises, right, for inflation. So if you buy some real estate and you just sit on it, one of the reasons why you can make money is because of inflation, with the other reason being related to demand. So one is where actual demand increases for property. The other one is where demand may not increase, but just simply inflation can push up the price of your property. Another time to invest is when properties are selling 20 to 70% below the cost to rebuild it. So there's a particular cost to manufacture that property, to actually build that property, right? To buy the land and actually build it onto that land. When properties are selling 20 to 70% below that, that's a good time to get in and invest. So basically what this is saying, when the price is right. When the banks start to tighten up credit and you start to get high unemployment and a lot more people sort of start to save, then what that means is that, not everyone's out there going out and just throwing money at these properties. So the prices, again, will be at a right time, and they will be highly affordable as well. Okay, so that's another thing to look out for. The other thing is when rental incomes are high, right? Because when rental incomes are high, usually the vacancies are starting to decrease, and that's why people are able to actually push up the rental incomes. And increasing rental incomes, when you get more money back from your rent, then you're quickly able to turn that investment into a positive investment by paying those high rental incomes back into your mortgage. The other thing to look out for here is the economists, right? The economists are usually wrong. So when the talk shows, and the news are all speaking about gloom and doom ahead, that they're going to be wrong, and that's probably actually a good time to start to invest. The other time to invest is when you're getting an increase in the number of distressed assets, right? When you've got a lot of desperate sellers, possibly going bankrupt or for whatever other reason, they're looking to sort of get out of their houses, and you get the banks piling up a lot of REO, because what happens here at this point, when you've got a lot of distressed assets, then the buyers can actually set the price. So you can actually get a bargain price. And that's what I actually do. I buy my REO from the banks and I set the price. I've got a little another note here. I'm actually going to delete it because I actually talk about this in a separate node. So I'm going to delete that. So that's talking about when you should actually invest and when to buy. Let's now close that up and let's have a look at when is the right time to actually sell, right, and get out of your investment. So one is when foreign capital is exiting, right? So when foreign capital was coming in, we were buying, and now when foreign capital is exiting, we want to exit as well. So you want to follow the big money, okay? Because the big money is usually smart. So if the big money is coming in, you come in, and if the big money is going out, you're going out as well. When the builders are building lots of housing units, things are going to start to be sort of overpriced. They're probably doing that because, they're seeing the demand, there's lots of demand there, but sooner or later they're going to flood out the market, and that's when you want to start to sell. When buyers are basically crowding into open houses and offering, overpriced bids, right? Where they're just going crazy with their bids and just doing almost anything to just buy that property. You know that they're paying overprices, and you know that that's probably a time that you want to be selling and you don't want to be buying. When interest rates go up, it starts to sort of drive prices down simply because of the affordability factor, where people can no longer maybe afford sort of mortgages, and so they start to basically sell their houses, putting more houses on for sale, and that drives prices down. So when that happens, when interest rates do rise, you want to be selling. When inflation seems to be controlled, you want to be selling, right? So when inflation is sort of out of control and growing, beyond their control, that's when you want to sort of be looking to quickly buy. But when inflation seems to be controlled, then you want to be selling, because this is one of the factors that will increase the price of your property. When properties are selling for, 30 to 100% above the replacement construction cost, you know that they're overpriced and they're selling for too much. So that's when you want to sell as well, right? You want to buy them when they're selling way below the replacement cost, and you want to sell them when they're selling way above the replacement cost. When buyers are over borrowing to purchase properties, they're willing to pay more, right? So they're over borrowing, they're getting lots and lots of money, more beyond their means, and they're willing to therefore pay more for your property, and that's a good time to also sell and get out, right? So this is when the sellers are therefore setting the prices, and the sellers can demand top dollar as opposed to the buyers setting the prices. When you've got low rental incomes and prices increase above what rental incomes justify, that's also a time you want to get out, because what happens is a lot of people have purchased property just so that they can sit on it and intake the rent. But if the rent is so low, then it doesn't make sense for them to keep their money in property, and they're probably going to move it out into some other type of investment. So that's sort of a lot of people that do that, and they'll be getting out. So you want to just get ahead of the game and just quickly get out when the rental incomes are low. And again, the economists are usually wrong. So if the economists are forecasting a blue sky ahead, then you can actually know that it's actually probably going to be, doom and gloom ahead. So as soon as the economists are forecasting a blue sky, you want to get out. So they're the indicators, guys, and they're the indicators for when to buy and when to sell. Let's now just take a look at what's the purpose of these indicators. Just move this over a bit just so you can see the whole presentation. So the purpose of all of these indicators that I've just showed you is basically so that you're buying it when the price is right? So that you're getting in cheap, right? It allows you to buy low and sell high. It allows you to basically get in cheap and therefore benefit when prices rise. But all these indicators, it's all based on price, right? It's all about getting the right price, whether that's timing it when other people are coming in, or timing it, when the rentals go up or the interest rates go low. Whatever it is, it's all about being able to get the right price, right? Being able to get in at the right price so that you can then sell it when the price increases. But what if I could find you a way and tell you a way where you could always buy it at the right price, always buy it for a cheaper price, okay? So that's what I do. Let me show you. So I don't actually wait for any of those indicators to be aligned, right? Because I can always buy it at the right price. And neither do you. You don't need to wait for these indicators to align, as long as you can also buy it at the right price, right? And at the right price, I mean way below the fair market value, right? I buy mine, from as low as 25 cents in the dollar, okay, of fair market value, okay? And this is exactly how I do it, right? I don't wait for any of the indicators to set up. I just find a buyer, right? I find a buyer and he tells me exactly what he wants and where he wants it. And then I go find him exactly what he's asked for. How do I find that? Well, I buy my properties direct from the bank, and I buy them way under the fair market value. Once I buy that, I then go back to the buyer that came to me and wanted this property, and I sell it to this private investor for slightly under fair market value. So he gets a property for under fair market value. I've bought it for way under fair market value, and I make a win-win situation. So that pretty much completes this video, guys. I've told you what Warren Buffett has said about, when to buy and when to sell. I've also given you some indicators on when to buy and when to sell, and I've told you the purpose of those indicators is just so that you can get those properties cheap. Then I've told you the way how you don't have to rely on any of those indicators because you can always get the properties cheap. If this video has been of interest to you and it has been helpful and you would like to find out more, then please do get in touch. My email address is riz.khan@rioncapital.com. So get in touch and I'll send you some information on how you can get started in investing and buying properties directly from the banks. Thanks for listening and wishing you best of luck moving forward. Take care now.